Okay, so a lot has happened in the last 24 hours since I posted last night. You recall last night the concern, and by the way, this is Tuesday, August 6th, 2019. Concern last night was obviously the Chinese retaliation with regard to currency deval, broke the 7 handle on the offshore yuan against the US dollar. So markets sold off precipitously, as we saw. We were concerned into the futures market last night, but really stunning. The Chinese government stepped in, stabilized the currency, actually pegged it just below that 7 handle. I think it was 6.96 and some change. But stabilized the market, obviously, and actually gave us a pretty constructive session today with a positive close, as you can see with the green candle. So nothing different on this chart, obviously, than just the green candle. Now, I just would say, I don't want to spend a lot of time on this chart since we looked at it last night. I do want to get to some individual names. But I do still believe that we have some risk here to the downside. I think we still will kiss off this 200-day moving average. We did overnight with futures right up into, 11:30 p.m., where we were really, many futures are trading really at this level in terms of how it would translate price-wise. Of course, this is, this chart doesn't capture anything happening pre-market or after hours, but stunning turnaround late into the night. Saw it get some traction through Asian markets, and then of course European markets into mid-morning, and then again, here, like I said, with the U.S. closing positively. I will say we did give up all the gains mid-morning, only to rebound and eventually, like I said, close higher. But again, I'm not 100% convinced we're not going to revisit whether it's the 200-day here or this 27.25 level, which was the, of course, June low. I would put in one quick trend line here from the December low. If you just, you look at these lows and just, kind of look at this upward trend here, you can see if we scale in, we're basically trading right at this level. So we'd like to see a close above that trend line. And then, of course, eventually a close here above this, this 29.50 resistance, which is where we had the failed breakout. Okay, so that's the S&P piece. Now let me just get to a couple of specific names. Let me start here with ZENTDOC. Actually, this is a kind of a conviction position for me. I'm going to touch on ZENTDOC, and I'll probably touch on TDOC as well. I might even touch another spec play that I'll maybe get to here before we close it up. But ZENTDOC has been a beast. I mean, look at this. Look at this trend line. It's continually trading above that 200-day. This was a broader market sell-off, as you guys know, into Q4 last year, pre-year end. This was the Christmas bloodbath, etc. We've just seen this thing continue to ramp up. So a really substantial pullback when you see what's going on with ZENTDOC. We went from these highs, basically about 95 here. And if we actually should put in a marker here and just really look at that 95 range as kind of where our target price should be. We're kissing off this 200-day moving average, as you can see, if we zoom in. Now, the earnings here that helped kind of initiate the sell-off actually was not a very, it wasn't a huge miss. And this is a cash negative company, as are many tech companies, but not a terrible miss. And relatively strong guidance. These guys work with clients like Uber, Slack. They've got a really strong client roster, and like I said, from a technical standpoint, and we talked about these long wicks in the first couple of videos, these can be extrapolated as bullish signals, and I think as we bounce off this 200-day, ZENTDOC is a long for me. I like ZENTDOC particularly, at these levels, and I think you're targeting that 95 price target. Now, I also mentioned TDOC. This is a company that I like just a whole lot. This is basically an innovator in the telemedicine space. These guys basically have a digital platform that facilitates virtual doctor's office visits. They've recently begun to form partnerships with insurers like United Health to help subsidize the cost to consumer. So these are now covered often by insurance plans. So just, more bullish news for TDOC. As you can see, we're talking about an all-time high up here of about 88 bucks. This occurred in September of last year, so roughly about a year ago. We really had a rough go of it here and broke well below the 200-day moving average. But as you can see, the company has started to get stronger footing. Like I said, their most recent earnings here was actually a beat to the upside in terms of expectation. Still a cash negative company, again, not unlike the company we just spoke about, ZEN TDOC, cash negative. These guys are losing about 41 cents a share. But again, I like the upside here. This is one that I've been long for quite some time now, and I generally trade around it with options. But as you can see, right now the short-term resistance is the 71.50 range. We saw a nice bounce back today. We're going to hopefully revisit this, this 71.50 level and break through. If we do break through, I think we can look forward to some fall through into 88. And last, I'll just mention it real quick since I kind of teased it. And this is CLDR. So this made some, as you can see, horrible looking chart. I mean, this is brutal. These guys have just gotten their absolute dick kicked in. This is a really bad looking chart, trading well below that 200-day average, but you do see a little lift here, and I want to point out why. So first of all, these guys are a cloud platform, kind of AI data aggregation platform. But over the past week, there was news about Carl Icahn taking a substantial stake in the company. I think it was about 14%, if I recall correctly. But anyway, that's interesting news because Carl Icahn's got a pretty strong track record despite just how poorly this stock has performed. You see this massive gap down here at the very first week of June on earnings. So just been a brutal, I mean, this chart is very ugly. But again, I think one thing that you'll notice here, I mean, we've broken above this 50-day moving average, which is the yellow line. So now you're looking at maybe this 100-day. And we closed above it. So I think if this is a spec play and you're looking for, maybe some fun money to put to work, I kind of like this setup. The highs here, I mean, this was a stock trading, up here around 20 bucks. I mean, so if we put if we just stick a, high in here, they're about 20 bucks. I mean, we've got a lot of potential upside here. I mean, maybe we should wait and see if we get some confirmation and we, the Bollinger Bands right now, we're trading at the upper end of that Bollinger Band, so I like that. Break that 100-day and we could see a huge breakout. CLDR, spec play, but one I like, give it a peek. Anyway, let's see what happens in the markets. Probably catch up on Sunday night.